Good morning. In the energy quadrant, crude is a big mover, down about 2.5%, over 3% at one point, but natural gas really is the story. Natural gas futures down 9.5% on their lows today, creeping up just a little bit, but not recovering much at all. But despite today's move, natural gas is still up on the month. We're about 40 basis points, or just less than 0.5% from being negative for the month of January. So it's still a solid up move for the month. It was that one big week in natural gas that spiked everything higher as the talk of the polar vortex event and some frigid temperatures coming through actually increased. But we've had a slight warming. We did get frigid temperatures across the Midwest. Parts of the Northeast are getting that today and over the next couple of days. But there was kind of a surprise warm up. The surprise move above average temperatures into about the 36-degree range here in Chicago and bigger above the Midwest, pushing that cold air and keeping it up toward Canada was part of the reason for the sell-off today. Now, longs are fleeing out of this trade because it was supposed to sustain. We are going back into frigid below average temperatures later in the week and into next week, but the vast majority of it's going to hit the upper Midwest, the upper Northeast, and then the rest of it staying up into Canada, not pushing demand as high above average as was expected. Still looking for high to very high demand toward the end of this week. But then again, another push of mild weather. You're always looking at weather, and then seasonality is kind of playing out correctly. Last 20 years of seasonality shows a mild spike in toward the end of January, a move down in toward the February, sideways, and then middle to end of February, a pronounced move higher in natural gas. So far, we're playing out that way. And then you look at last week's EIA numbers. We had a 79 billion cubic foot draw, and that was a little bit higher than the expectations, but quite a bit lower than the 5-year average of the draw for this particular date and time. Analysts were expecting about 72 billion. Again, actually we got about 81, not 79. So we got 81. Analysts were expecting 72 to 77, so it was higher than expected, but 218 billion cubic feet is the 5-year average draw for this time last week, or rather last year, and over the last 5 years. So when you look at the total inventories now, they increased a little bit. We're 327 billion cubic feet above the 5-year average for this time last year. For this time over the past 5 years, and 77 billion cubic feet above this time last year.